Thank you so much, guys, for joining today. The webinar, as the name suggests, it will be mainly talking about understanding the IFRS 5. Now, what is IFRS 5? How do we apply it? We will talk in a bit. Just to give you a brief about myself, my name is Rahul Talwar, and I will be taking this webinar with you. I will be telling you about how to do the accounting of IFRS 5 today. Just to give you a little bit brief, I have been working in this field from last 10 years, more than 10 years. I started my career in London with Big Fours and have been working extensively in this field for quite a while. So you can say that I have a little bit of experience of how the IFRS work and what are the changes that are coming into the IFRS these days. I have been in the training field from more than 7 years and have trained more than hundreds of students and corporate professionals. I do teach ACCA, CIA, CMA, and CPA as well, but my core interest has always been in financial reporting in IFRS. So that's all about me. Now, I'm happy to say, or I feel honored to say, that I'm associated with Kaplan. And Kaplan is one of the leading provider of training solutions for professional qualification and technical and behavioral development programs. I'm happy to say that we have trained more than 1 million delegates worldwide on these qualifications. We have helped our candidates achieve their goal through our experienced trainers, world-class support, and with the digital solutions. Now, before I talk about IFRS 5, let's make the webinar move. Just wanted to know, what do you understand with IFRS? Let's interact with each other. Let's try to break this, ice between us. Let's interact. What do you say when you heard the word IFRS? Anyone? Now, why do you think that we need IFRS implications or implementation around the world? Why is it become so important suddenly that everyone says that, okay, you should know the knowledge of IFRS? Absolutely, Vinesh. IFRS is your international financial reporting standards. These are the international standards for financial reporting. Absolutely. Anything else, anyone? Amazing. Thank you so much, guys. Thank you for your for writing it down. See, let's try to understand one thing. In today's time, to be consistent. Okay, perfect. Yes, absolutely. Now, one thing you need to understand is that today, if I want to start doing a business while sitting in Dubai right now, if I want to do a business in, let's say, US, it is not a difficult thing. I can easily start a business while sitting over here. I can do a business in US, UK, or any part of the world, right? It's not a difficult solution, or it is not a difficult task anymore to run your business around the world. So with the help of the globalization and with the liberalization of the rules and trade, the world has become a global village where you run your business around the world. And that is why you see many multinational companies are rising every day. Now, obviously, if I want to do a business in US, I want to start and run my business in US, I will be needing money in dollars. I will need some capital to run my business, and that capital should be in dollars. Yes or no? I hope everyone agrees. If I want to do a business in US, I will need money in US in dollars. So what will I do? There are two things. Either I can go to a bank in US and I can ask them that, guys, give me some loan. I need some capital for my business, so give me a loan. Or I can go and try to raise fund from the investors. But if anyone is going to give me the money, if anyone is going to finance the money to me, the capital to me, they will ask one thing from me, that is my financial statement. They will ask, okay, Rahul, yes, absolutely, we are happy to give you the money, but we need your financial statements. So what will happen? I will have to present my financial statement about my business financials I have to give them. And then they will read it, they will understand it, and then they will decide whether to give me the money or not. I hope everyone agreed to till this point. Everyone agree that this is the steps I should be following? Good. Thank you, Vinish. But this is what was happening, but there was a small issue coming up. Now, when I give my financial statement, I made the financial statement according to my understanding of Dubai accounting rules and concept. Similarly, those companies that are not based in US and they're trying to raise the money in US, they will try to make their financial statement, but as per the rules, as per the accounting knowledge of their own country, of their own rules and regulation. And it is not necessary that the business, the banks and the investors sitting in US have the complete knowledge. They might not be having a complete knowledge of the accounting. So this created a very problematic situation, a very difficult situation, because of different accounting frameworks in different countries created a confusion. It started creating a confusion for everyone. Right? And this is where we all came to realize that we need some standardized rules and regulation. We need some accounting standards that are recognized globally so that the financial statements we are making, they can be understand everywhere. Okay. And that leads to the concept of high quality global accounting standards that lead to the requirement, that lead to the need of globally accepted accounting standards. And why do we needed it? To gain the trust of our investors. If they are able to understand what I'm presenting, if they are able to understand what how the financials of my company is, they can make a better decision. They can decide that, yes, the company, I read their financials, I understood, and now I know that the company is a good fit. I can invest in it. It's going to be a good investment for me, and I'm happy to fund it. So what IFRS do? IFRS are a principle-based set of standards. They're not the rules. They are principles that guide you, okay, that how to make a financial statement. They give us certain standards and rules, certain principles to be followed while making our financial statement. They give us some guidelines that we should be following. And by following them, we all around the world can have a standardized format of making the financial statement. I hope till this point everyone is clear. Yes, guys? So this might give you an idea why IFRS are important. This might give you an understanding why we are asking about IFRS, or why IFRS are getting so popular in the world of finance. Going forward, the objective of IFRS has always been to develop a single set of high quality, understandable, enforceable, and globally accepted financial reporting system. I'm going to repeat it again. To develop a single set of high quality, understandable, enforceable, globally accepted financial reporting standard. Whatever IFRS is saying, it's not going to change. For example, if I'm using IFRS over here and my other subsidiary is based in UK, the IFRS, if we are using the IFRS rule, will be same for both the companies. So it brings a and system, a constant system between all the companies that are making their financial statement. My financial statement is not going to be different to your financial statement. This is the purpose of IFRS. It basically provides you a worldwide common accounting framework, which are to be observed in the presentation of audited financial statement to promote their worldwide acceptance. So as I told you, to gain the trust of my investors, to gain the trust of my shareholder that, hey guys, give me the money, I want to expand my business and this is going to be a good investment for you. In order to tell them, I will use this common accounting framework throughout my financial statements. And if they understood it, because every financial statement is made in the same manner, they will be able to understand it and they will place their trust on my company. Okay. So this is the major objective of IFRS. Now, today's topic, IFRS 5. Let's dive into IFRS 5. What does IFRS 5 means? How we use it, okay? And what is the accounting of IFRS 5? So IFRS 5 basically stands for non-current assets held for sale and discontinued operation. I'm going to break this standard into two areas. One is non-current assets held for sale and discontinued operation. Now, before I say, you tell me, what is non-current asset held for sale? What does it say? The name itself explains us. What does it mean? Non-current asset held for sale. Anyone? As the name suggests, basically when you decide that you don't need this asset in your business anymore, when you decide that you don't need these assets in your business for the operation anymore, and you decide to sell them, okay, an asset which is a non-current asset, and you have decided now you are planning to sell it, you're not going to use it for your business operation, those are called non-current assets held for sale. Okay. And discontinued operation, what does discontinued operation means? A closure of the entire business unit. Okay, a closure of an entire business unit, which might result in a closure of an entire product, or it might lead to a closure of a geographical location. Earlier, I used to make product X. I decided to discontinue it. I'm not going to make any more product X. It cannot be anymore sold in the market. You cannot find that product anymore. So it's a discontinued operation, leading to a closure of my product X completely. Similarly, earlier I used to operate in, let's say, California, or I was operating, let's say, take a wider market, I was operating in US as well. But now I'm deciding I will close all my business, all my operations in US market. So again, this is a discontinued operation. Why? Because it will lead to a closure of geographical location. So I hope both the words are understood. Non-current asset held for sale, what does that mean? And discontinued operation. So let's go one by one and try to understand in more depth how IFRS 5 is applied. In order to understand IFRS 5, in order to apply IFRS 5, it gives you 5 criteria. IFRS 5 gives you 5 criteria that needs to be followed. Okay. Very simple. Always remember, IFRS 5 gives you 5 criteria that needs to be followed. And when do we apply IFRS 5? We only apply IFRS 5 when an asset or disposal group, okay, we know that by selling the asset, we will be able to recover our what do you say, value, and the sale is going to be highly probable. We know that the sale will happen not today, but by tomorrow my asset will be sold. Okay, so this is called, then only we apply IFRS 5. Now what are these 5 criteria? The first criteria is management is committed to sell the asset. Management is committed to sell the asset. What does that mean? That the management is 100% sure that yes, we are 100% confirmed we will be selling our asset. We're not going to be using in the business operation. We have even decided it in our board meeting. We have taken a decision that yes, within a year, we will be selling our asset no matter what. We are not using, from this day onwards, we are not using this asset for our business operation. And as soon as I find a buyer, I'm going to sell it. This is what management commitment means. Second point is you are actively looking for a buyer. You have publicized it. You have marketed the sale that, okay, we have this asset with us and we are looking for a buyer. Anyone who is interested, please contact us at this number at this place, and we are happy to sell this asset. It's not that you're just keeping the information with you and you're saying, oh, we have decided to sell the asset. No, you have to now publicly announce it as well that, yes, I want to sell my asset. Is there any buyer outside? Just buy my asset. Okay. Then a reasonable price should be quoted. What does reasonable price now means? Anyone? Reasonable pricing is quoted. Well, when I'm saying reasonable pricing means I cannot just put any price, any unrealistic amount. I'm selling my asset. My asset costed me 500,000 and now I'm selling it for 1 million. It's very unrealistic, right? If you are using an asset, you have used it for some time, it should be on the basis of, someone has quoted very nicely. What is it? Let me just see. On the fair value, or the price should be affordable. Absolutely, that it should be on the basis of the market conditions, on the working condition of the asset, and should be a realistic price. Then asset is immediately available for sale. As I said, as soon as you decided that I'm going to sell this asset, you will not be using it in your business operation. Company is not using the asset. It should be, if tomorrow a buyer is coming, the asset should be ready to be sold. We're not going to say, oh, don't come today, come after 6 months, I will give you the asset. No. If you have said that the asset is held for sale, that means it should be held for sale. It should be ready to sold. It is probable that the asset will be sold within 12 months. Within the next 12 months, it should be ready to be sold. Could you please repeat when IFRS 5? As I said, an asset or disposal group is held for sale if its value will mainly be recovered through the sale transaction. When I know by selling the asset, I will be able to recover almost its value, okay, most of its value, then I will hold it for sale. When I've decided that I will not be using the asset anymore and I can recover its value, okay, from the sale, at that time we record the asset as held for sale. And these are the 5 criteria that all of them should be met, not one of them. All of them should be met in order to classify an asset under IFRS 5. Is that clear, everyone? All right. Then, how the accounting has to be done. First of all, from the date I am saying that the asset is held for sale, as soon as I'm classifying the asset under IFRS 5, no depreciation will be charged. No depreciation will be charged. And the asset is measured at the lower of their carrying amount or fair value less cost to sell. Whichever is the lower, either the carrying amount or fair value less cost to sell, the asset should be measured at the lower of it. If there is any loss, it should be immediately recorded in P&L. It should be immediately recorded in P&L. And from the date you are recording it as held for sale, you will record it under current asset. It will not be a non-current asset anymore. It will be recorded as a current asset. And why so? Because you are saying that within next 12 months, this asset will be sold. It's highly probable, we are completely committed that this asset will be sold in the next 12 months. So that is the reason we are recording it under current asset. Is that clear? So very easy accounting. As soon as you are saying that the asset is held under IFRS 5, no depreciation will be charged. It will be recorded at the lower of its carrying amount or fair value less cost to sell. The loss will immediately be recorded in the P&L, and it will be shown as a current asset. Now let's talk about discontinued operation. I have already explained you discontinued operation, but let me quickly go through it one more time. What is discontinued operation? When a closure of business unit, which would result in a closure of a product line or a closure of a geographical location, then it is said it's a discontinued operation. As soon as you are closing a product line or a closure of geographical location, then it is said discontinued operation. It refers to that part of the company's business that have been terminated and are no longer operational. Is that clear? So let me just make an example. I'm operating. Sorry, just 1 second. Yeah. Let's say I'm operating in country A and country B, and I'm selling product 1, and product 2. Now let's say product one is sold in country A and B, and product 2 is only sold in country A. Okay. If my situation is, if we close product 1 in country A, then will it be a discontinued operation or not a discontinued operation? What do you think? Will it be a discontinued operation or it will not be a discontinued operation? If I today decide not to sell this product, I remove this product, will it be a discontinued operation? The answer is no. Why? No, Amika, no. Why? Because see, if I stop this product right now, I'm not selling this product anymore, it is still available in product B. So this is not a closure of product line. And similarly, in country A, although I have stopped product 1, but product 2 is still there. So it's not a closure of geographical location. So that is why it is not a discontinued operation. Is that clear? But if we close product 1 in country B as well, now I've decided that I will remove this product from country B as well. Now it will be a discontinued operation. Why? because it will be a discontinued operation because now the product is discontinued. It leads to a closure of product line. Is that clear? Clear till this point? And let's say if we close product 2 in country A, if we close product 2 in country A, now I'm removing this product as well. Okay, it's not about. So what will I do? Again, it's a discontinued operation. Why? Because it is a closure of geographical location now. So is a discontinued operation. I hope till this point it is clear. So this is how we decide whether it's a discontinued operation or not. Another thing you need to remember, how to present discontinued operation in the financial statement. How do we record them? So let me just take you with the basics. Okay, definitely, Ahmed, just 1 second. So as I said, Ahmed, let's say I am running product 1 in country A and B and product 2 in country A only. So if I close product 1 in country A, if we close product 1 in country A, I remove this product, I close this. It doesn't mean my product 1 is discontinued. Why? Because it is still being sold in country B. It is still available in country B. So it's not a closure of product line. Similarly, in country A, I'm still selling my product 2. So it is not a closure of geographical location either. Getting my point? Neither it's a closure of business product line, neither it's a closure of geographical location. So that's why it's not a discontinued operation. It's not a discontinued operation. Similarly, if, for example, now I close product 1 completely in country A and in country B, in both the countries, I have stopped product 1. I have stopped the product 1. At that time, it is a discontinued operation. Why? Because it leads to a closure of my product 1 completely. I'm not selling it anywhere now. It is not being sold anywhere. So it's a closure of product 1 in country B and country A. And that is why it's a discontinued operation now. Similarly, let's say I close my product 2 in country A as well. My product 2 is closed in country A as well. Again, it's a discontinued operation. Why? Because in country A, I have stopped completely my business. Nothing is being sold. Okay. So let's say even if it is sold in a country A, B, C, everywhere, but still in country A, it's not being sold anything. So it's a closure of geographical location. And that's why it's a discontinued operation. Is that clear? I hope till this point it's clear. Yes, guys. Now comes the other point. How do we present the discontinued operation in our financial statement? So let me just quickly take you, how do we make the P&L? Absolutely. If it is being sold completely, for example, the product is now sold, not sold anywhere in the world, then this is closure of the product line. It's a discontinued operation because you're not selling that product anywhere in the world. Similarly, if you're closing your entire operation in one country, in one location completely, then also it's a discontinued operation because now your business is not being operated in that country anymore. Perfect. Now let's talk about how to present it. So if you remember, when we make P&L, we talk about revenue, we start from revenue, we deduct cost of sale, and we get our gross profit. We get our gross profit. Then any other income is added. Then admin expenses. Then any distribution cost is deducted. Then any finance cost is deducted. And this leads to your profit before tax. This leads to profit before tax. And then you remove your tax expenses, and then you get your profit after tax. Now, in the case of discontinued operation, we don't write profit after tax. We basically divide it into two parts. One is profit. One is profit or loss from continued operation. And second is profit or loss from discontinued operation. Okay. Whatever operations you are still carrying on, you will keep them as profit and loss from continued operation. And second, you just keep profit or loss from discontinued operation. This is a one-line item that you present in the P&L. These all things that you are presenting over here, this will represent your continuing operations. And there will be just one line, showing profit and loss from discontinued operation. That is what is the accounting, or that is what the presentation of discontinued operation is. Okay. You remove the profit and loss from the line items in SOCI and just show profit or loss from discontinued operation as a single line before PAT. Okay. I hope till this point everyone is clear. Now, that was in short, in a crisp manner, I have tried to explain you how IFRS 5 is operated in real life. Okay, this is the accounting that we do for non-current assets held for sale and for discontinued operation. Now, at Kaplan, how do we provide our trainings? I want to highlight that as well to you. Okay, we provide Kaplan's diploma in IFRS, a very in-depth program designed, giving you all inside information of applying how each and every IFRS is applied in the real world with some real life examples. Okay. And this basically certificate will help you to demonstrate to your employers or to the clients that you have a deep understanding of the principle and the applications of each and every IFRS. Okay. You will gain the ability to interpret and apply these standards in practice. So with Kaplan, our certified IFRS diploma can provide you with the comprehensive, in-depth knowledge of how each and every IFRS is applied and how to understand or how to interpret each and every standard while making the financials. The program is designed in 3 stages. The first stage talks about the conceptual framework and the accounting for assets and liability. Okay. In the second stage, as soon as you reach, you will be talking about how to present and how the disclosures are made in the financial statement. And the third stage is basically talking about the combined entities and joint arrangements. Okay. About the business combinations and about the group accounting, all those things we discuss in the stage 3. So we got 3 stages, stage 1, stage 2, and stage 3. The program is of 48 hours, where the expert trainers are helping you to understand each and every standard. And we have an 8 hour of intense revision training where we will be revising each and every standards again with the real life examples. There is a program test that will be held after every stage. You will get our own design integrative workbook along with a question bank, where you will have more than 100 of questions to test, and more than 180 plus questions for the exam preparation. You will have mock exam. Along with that, you have support from the trainer throughout the journey on the WhatsApp to clear your doubts. What is the benefit of this diploma? You might have this doubt, or you might be having this question in your mind, that what is the benefit we're going to be getting? Well, the first thing, global recognition. As I said, IFRS are accepted around the world. Okay. So by gaining this diploma, by putting it in your CV, you will get a global recognition. It will advance your career. Obviously, it will give you some competitive edge because you will have an in-depth understanding. It will impress your employers. There is an increased salary potential that we all look for. That is the major point for us. And again, it will help you to understand the compliance and will give you the regulatory expertise as well. Okay. Now the point is, why Kaplan? Why we should be giving you this training? First of all, it's a globally accredited program. We have extensive exam practice we provide you through tests, through quizzes, through mock exam and revision sessions. We have flexible learning option. Either you can have face-to-face or you can have online. You have effective monitoring and reporting framework to ensure that success is all yours. Our material is globally renowned. So whatever we are presenting will cover everything that you need to know. And at the end, we are there for you. You always going to have a continuous tutor support with you. The next batch is starting on 15 November. And I hope that you will be there when we present you our IFRS in-depth knowledge. Okay. If anyone have any questions, please, this is the time, ask me. Yes, team. Imran, okay, I will ask. I will ask the team to share a recorded version. Hi, Sarah. Guys, everyone will be receiving the recording within next 48 hours. Okay, so you can go back through that. Sarah, as I mentioned, after every stage over here, right? So we will have a mock exam to test your exam readiness. After every stage, there will be progress tests that will be held. Okay. So after stage 1, you will have a progress test. After stage 2, after stage 3, you will have the progress test. And then you have a mock exam as well. And in between, obviously, examiner will be there to test your knowledge from time to time. Okay. So you have enough of the test. We make sure that you have complete knowledge of IFRS after this course. The course fee is 4,500 dirham for this course, where you will be getting all the material plus the expert trainers knowledge. Any other doubt, guys? Yes, team, anyone wants to ask anything? It was my pleasure, Sarah. I hope the webinar was helpful, and now a little bit of understanding of IFRS 5 is there with you guys. All right, guys. Thank you so much. It was lovely interacting with you, and thank you so much that you all interacted. It was wonderful. Please, everyone, if you have any doubt, there is an email we have put it over here on the chat, Nandini Sridhar at kaplanme.com. And the number is 581909262. If you have any doubt, if you want to inquire anything, please feel free to reach out to us. We are here to help you out. All right. So that's